Today's video is on JEPI and JEPQ. They're both covered call funds that give you about 10% dividends per year. JEPQ gives you a little bit more than JEPI. And I'm going to describe how I use them in my portfolio to get $110,000 in income per year. Now this number was 116, even 118 yesterday if you saw my last videos, but I think Etrade was counting off by 1 month. So sometimes you have to factor in those glitches for Etrade. Now, if you want to just add up my income and see for yourself how I'm getting this 110,000, you simply take the cornerstone funds, which are 80 grand. 80 grand for the cornerstone funds, 20 grand for the yield max funds as I scroll through here, and then all the other fund specific like GOF, like the more 4-star steady funds that I have, GOF, and all the rest of my funds are about 1,000 I get from those. So about 12,000 from those funds. So 80 from the cornerstone funds, 20 from yield max, and about 10 to 12 from these other funds that you see throughout my portfolio. And then there's another page here too to go see the rest of those funds, but they get smaller and smaller in dividends. And I also plan to get this number up to, even though it's at 110 now, I plan to get it to 120 through the next yield max funds that we buy when those other funds launch, the NVIDIA and Berkshire Hathaway one and all those other new ones. Coinbase, I'm excited about all those. Even though I don't necessarily like Coinbase, I'm doing it for the income. When those all come out, I'm going to raise the income to about 120. But then don't forget the drip from our cornerstone funds. Cornerstone being our largest holding again. When I show you Cornerstone here, my earnings, it's about $7,000 a month from Cornerstone. Every month that's reinvested at 21% at NAV. So that's $1,500 extra dollars I'm earning per year on those shares. And then you do that times 12, that's $18,000. So this number is going to grow to $138,000 in the next 12 months. That's my goal at least. So I'll show you how I get there with JEPI and JEPQ. If you go to my positions, you'll see that I own JEPI. I own 15,000 of it, but I don't own JEPQ. Why is that? Because I have other tech funds that I use in the place of JEPQ that have lower maintenance. And if you want to see more on the specifics of JEPI and JEPQ, please see our last video. I'll link it in the description below. That gives more of the basics and the specifics of the fund themselves. But I'm just going to show you the maintenance because that's how I use JEPI and JEPQ. See, if we go to the margin tab, let me go back to my portfolios page, and we'll go straight to the margin tab. You click this. Every brokerage house should have it. And I'm going to enter in the 3 ticker symbols I want to talk about today. JEPI, JEPQ, and then this other fund that was brought to me by my subscribers, and it's going to be QQQX. But JEPQ, let me just enter that in before I forget. JEPQ, see how JEPI is 35% maintenance and JEPQ is 50% maintenance? And then QQQX, the Nuveen Covered Call Index, 30%. So the Nuveen Covered Call Index has 30% maintenance, JEPQ 50 and JEPI 35. JEPI is more total market return, whereas JEPQ and the QQQX are tech related. So as we go to the JEPQ holdings, you see that they have more tech dominance in there: Microsoft, Apple, Amazon, NVIDIA, etc. And if you go to JEPI, you'll see that its holdings are more diversified into healthcare and defensives, more stable companies. So JEPI on a Morningstar test, by the way, made 14,000, a little over 14,000. If we go in between this space of 16 and 14, in the middle is 15, and it made over 14. So it made about $15,000 over the time span that it's been out, JEPI. But JEPQ has obviously fallen harder since its inception, and that's because it had tech holdings, and those got knocked down in 2022 from the bear market. As you know, rising interest rates hurts tech stocks. But I look at the climb back from 8,800 to 10,000, almost 10.4, and so it's having a nice V bottom here, and it's outperforming its index. The blue is JEPQ, and the index is maroon. So now JEPQ is starting to outperform the index. It's a nice sign for JEPQ investors. And I wanted to show you Nuveen, this NASDAQ 100 covered call fund, QQQX. It made 40,000. It was in line with the indexes in the S&P, whereas the category, the yellow line, made about 20,000. And that's what we showed yesterday on those global X funds, QYLD, XYLD, etc. They made in this range, this $20,000 range, whereas this QQQX, as one of my subscribers again pointed out, it had less than NAV erosion and it made it all the way back to 40,000. Yet it still has a healthy dividend. If we go in and check out QQQX, I think the dividend was, let's go verify. The dividend was, it is 8%, so not bad at all. I told you I've also given you STK, which is growth, and it does some covered calls. Has a similar dividend of 7%, but on a Morningstar test, it made 75 grand over the last 10 years. STK, Columbia Premium Growth Fund, STK, 75 grand. So you have these various advantages with these growth funds, JEPQ, QQQX, and STK. JEPQ is fine. I don't see a problem with it, but for my purposes of my portfolio, which, as you know, I use margin to maximize my income of 110,000 per year that you saw. I use this margin number here to squeeze out more income. So that's at 244 now. And I'm always watching this number as well, the available withdrawal. So if my account is 370, my available withdrawal is at 123, and that's the cushion I have till I'm in a margin call. So I can't let that go to zero. And if I were to buy, let's say 10,000 of JEPQ, this available for withdrawal would fall by 5,000 because it's 50% maintenance. Whereas if I buy 10,000 of JEPB, my available withdrawal only falls by 3,000. So I get almost 50% more buying power through JEPI and QQQX, which I'm going to start a position on Monday, I think. But again, I liked STK and I sold that because it was a small dividend for me. I rotated into OARK and these higher yielding tech funds, these covered call funds, because I feel a little bit more comfortable with risk. Being 36 years old, I feel like it's okay for me. And excuse the noise in the background if you hear that noise. So JEPI gets me more bang for my buck. JEPQ, nice fund, is a tech covered call fund, but it has 50% maintenance and I can't use as much margin on that as a result. All these other funds that you see up top, BST, it's another great tech fund. Go look into this stock, okay? Go look into this fund. It's a BlackRock fund. It's 30% maintenance. It's always been one of my go-tos for tech, BST. 9.5% dividend monthly, and look at what it did on a full time frame. It has gone, it made a big move from 30 to 60. So you can get good capital gains potential in this fund. And it's at the lows once again at 30. It's like at a triple bottom from 2019 lows, 2020 lows, and 2023, as you see there. And it has a 10% dividend roughly. So I like these other tech funds in the place of JEPQ, because they have lower maintenance, not because I see anything wrong with JEPQ. And I just want more monthly income. As you know, I'm trying to get to 10K. You just saw this at 110.5. Now it's at 111.5. Sometimes Etrade has funky updates and it goes by a month. It'll add a month or take a month off of earnings. So I apologize for any of those discrepancies. If you go to my performance and value, it was the same thing. Remember one time you saw that, yes, we're beating the market. We're up 18%. Dow's up 2%, S&P is up 8%, and the NASDAQ is up 17%, and I'm rounding. But if you went to our 3-year performance, remember I was up 250%. Now it shows I'm only up 130%. But I'm still outpacing the market handily. As you see here, market's up 43% on average over the last 3 years, whereas I'm up 130%. I go by these charts. Sometimes they give me the wrong numbers, but the charts don't really lie there. So as long as I'm getting good correlation with the market, which it shows I'm getting there, I'm happy. And as long as I'm beating the market this year, which it shows that I am, again, on a year-to-date chart, 18%, then I'm happy. So the reason why I'm beating the market is because I stay in funds like JEPI. They're top funds, top quality funds, and they don't have much volatility. And so I'm just collecting these nice dividends off of a fund like JEPI, and I'm maximizing my dividends without messing with this available withdrawal number through JEPI. JEPQ affects that a little bit more. So I think I'm going to end the video here because you've seen my last video on JEPI and JEPQ. Again, I'll link that in the description below. That gives you more specifics on those two funds. But for the purposes of this channel, I prefer JEPI and QQQX and these other tech funds I've recommended to you for tech exposure because they give more growth, by the way. Well, I don't know. JEPQ could give the growth, but they give growth, the same dividends, around the same dividends, but lower maintenance. That's how you get more income and the best bang for your buck. So anyway, I hope you enjoyed the video. Leave questions in the comments section below. I'll talk to you soon. Thanks.